Hello everybody, welcome back for another video. Hope you're all doing well. You're all having a great day, morning, afternoon, and or evening. Likes are always appreciated. They help out the channel more than you could begin to imagine, as does leaving a comment. It helps out with the algorithm. Welcome back to another News I Missed, where I talk about the news in the cryptocurrency space that happened, but some reason I've actually missed it. And without further ado, let's jump right into it. Santiment, the leading market intelligence platform with on-chain and social metrics for over 2,500 cryptocurrencies, has selected XRP as the main focus crypto asset for January 2023. Yeah, see, it's big news. The analytic platform plans to strategically pick different cryptos to understudy every single month. In a Monday community post, Sanar King, a top contributor on the Santiment Insights, investigated the potential upside and downside for XRP in the short term, midterm, and long-term perspectives. The crypto pundit also highlighted the various factors capable of influencing the price of XRP. Future developments in the ongoing, never-ending, seemingly Ripple SEC lawsuit are regarded as factors that could affect XRP's price either positively or negatively. Based on Sanar's analysis using metrics from Sanbase, and a few technical analysis indicators like the weighted sentiment metric and MVRV ratio, Sentiment has suggested a possibly bullish movement for XRP. The analytics platform said the XRP network has some intriguing network divergences, pointing to strong bullish cases. No one knows when this lawsuit is going to end, but you'd better believe if it's anything relatively similar to Coinbase ending their lawsuit, for those of you who missed that a couple of days ago. Coinbase was being sued by some New York ABC 123 government thing. They ended up settling and their stock popped up by 12% immediately. We have gotten an egregious amount of news about whales who have been buying up Bitcoin, Ether, and XRP a lot over the last 3 months in expectation of this lawsuit ending. There was news from the other guy, some older guy, a billionaire. He mentioned that he's only buying XRP right now. There was some other prominent person in the cryptocurrency space about a week ago who announced that he was hyper bullish on XRP. All eyes are on this lawsuit, because if Ripple wins or Ripple settles and the SEC can't go after them or XRP anymore, the coin's price is going to skyrocket, as will every other coin out there. According to Santiment Insights, the current performance of XRP in the market is part of a larger uptrend that could potentially complete a triangle formation. Currently, they say the price of XRP is at the bottom of this triangle. He suggested that XRP is at a good buy zone, but with potential for low risk and high reward. A lot of people, this coin's price and many other coins' prices in the space have been hampered down by years of absolute nonsense, and this is where we're also getting that that positive sentiment that we see flowing through the cryptocurrency space since the beginning of the year, as a lot of people are looking at lawsuits that are ending and also ready to make money once again. Also, all eyes are on March. That's the Santiment. Has chosen XRP as their top pick for the month. We'll see what they choose next month, and we'll see if this lawsuit will ever actually end, because the SEC is trying to do anything they can to make sure that it doesn't. Alrighty. Let's move on. Now, here's some ruh-roh kind of news. The world's largest crypto exchange, Binance, apparently had a market share of 92% of all Bitcoin trading towards the end of last year. This is according to Arcane Research. For those of you who don't remember or are pretending to not remember, towards around November, whenever the entire FTX fiasco began, I mentioned myself, because this is me from the outside looking in. I said I thought something was a bit peculiar about the timing of Binance announcing that FTX had a problem, and then subsequently basically not telling people that there was a safer place to put their money, and it was on Binance. When you talk about actual decentralization and movement of funds and placement of funds in the cryptocurrency space, if any of us had heard that Ripple was holding 92% of all XRP, there would be a gigantic uproar. If we heard that Vitalik Buterin was in possession of 92% of all the ETH, people would go insane. This, however, for some reason set off no alarm bells in anyone in the cryptocurrency space. How many crypto exchanges, crypto companies, and DeFi platforms fell apart, collapsed, or filed for bankruptcy last year? I'll give you a hint. The number's over 20. When you talk about one cryptocurrency exchange accounting for 92% of all the trading for Bitcoin, that is a gigantic red flag. Now, I know somebody's out there going, why is he spreading FUD once again? This is just FUD. What happens if Binance goes down? Yeah, exactly. Yeah, that part. What happens if we find out that this entire time Binance has been dealing in similar workings to FTX? What happens if something goes wrong that we cannot predict? This is why we had 20 times last year, because people were like, oh, that can happen as well. This is insane. And this was not popular news, which I think is very telling of a lot of the cryptocurrency space. People don't actually care where their money's coming from as long as they're getting it. If Binance fails, the entire cryptocurrency space fails. I don't think people understand the significance of being as large as Binance is. The exchange's market share was at 45% at the start of last year, but the elimination of trading fees in June, not to mention the collapse of their rival FTX in November, which I still think is a little weird. Don't you remember when towards the end of December, when a lot of people, there was another crash of something, and a lot of people began to take their coins off of Binance and onto cold storage wallets, and Changpeng Zhao freaked out and said, no. Remember what he said? Can anyone tell me what he said? Anybody? He said 99% of people who self-custody are going to lose their coins. Why would you be saying a thing like that when the entire mantra of crypto is self-custody? The entire point of a cryptocurrency exchange is for you to exchange your coins and take them off. I'm not joking. It's not meant to be a custody solution. You are meant to custody your own coins your own way on your computer, on a ledger, or through some other means that you may have. You're meant to exchange your coins on an exchange, not keep hundreds of billions of dollars in one place. Because what happens, as we've seen historically, when banks collapse or institutions or governments fall, what happens to all the money from those people? They said, and I quote, "No matter how you look at it in terms of trading activity, Binance is the crypto market." This was written by Arcane Research. After lifting trading fees for Bitcoin spot market pairs this summer, Binance completely overtook all market share in the spot markets. And here's a little number for you right here. While Binance has been by far the biggest crypto exchange by trading volume for several years, these and other numbers suggest monopoly-like dominance. If you rolled your eyes, you should not be in crypto. You don't understand that this should not be happening. A lot of people assume that the phrase too big to fail is actually a thing. No one is too big to fail. One cryptocurrency exchange should not have 92% of all volume of Bitcoin trading. Can you imagine? Here we go. Imagine if China had 92% of all the Bitcoin mining capacity. Yeah, see that it changes things quite dramatically. A report from Crypto Compare showed Binance's overall year-end crypto market share was 66%. Coinbase had only 8%. They said, and I quote, "Retail crypto could enter a dark age that takes forever to exit should Binance fall." This was said by Edward Moya, senior analyst at Oanda. Binance is too big. It is not healthy to have so much of the trading volume concentrated with any one exchange. Do you remember we also had news that Binance, this is the alleged around December time, that Binance was insolvent and was having problems with their money. Who knows if it was true? Who knows what ended up happening? But if those rumors ever turned out to be true, you have to understand, the entire cryptocurrency space is one gigantic organism. It has billions of moving parts. If all those moving parts move into just one arm of the organism, it falls over and it can no longer walk. This has been a common trend over the course of the last 3 years, regardless of how much I may say these things or how unattractive my channel might be to many people, because I'm not hyping up the crappiest coins that are actually floating around out there. For those of you who do pay attention, I tip my hat to you. So many people don't understand that the entire cryptocurrency space is being morphed into the old financial system. This is why we hear so many people in crypto now raising their hands saying that we do need regulations. The idea of regulations would not be a thing if we didn't have so many criminals and scammers within the space, and also people willing to give the scammers their money and then lose it and then run to the regulators who are just foaming at the mouth to enter the cryptocurrency space. If we had 7 or 8 large crypto exchanges around the world, and they all had, let's say, a good 8 to 9% equally of cryptocurrency trading, we'd be in a very healthy market. You think what happened with FTX would be bad? We would see a $500 Bitcoin and nobody would touch it. It's not like Bitcoin's price would fall and everybody would run towards it. If Binance fall, Binance is basically our banking system. You need to actually get that through your head. So when I saw this news, I just knew this would be, the talk of the town. A lot of people would be going over this and discussing how, things like this simply should not be. This was the only website that spoke about it. Everyone else remains lightly delusional, caring about Sam Bankman-Fried's girlfriend talking to an agent in March, and she knew that she wasn't wearing sneakers, and somebody saw her at a coffee shop, and all this other nonsense that's been going on. If you don't speak up about this, nothing will change. What's the point of cryptocurrency existing if we go back to the exact same system? What's the point of having Bitcoin if there are billionaires who are buying up all the Bitcoin? There are 4 people on this planet who own more than 4 billion people. If you take the top 1,000 people on this planet, they own more than 80% of the people on this planet. What's the point of having crypto if we have 150 people who own nearly all the Bitcoin, all the Litecoin, all the Ether, all the XRP? Anyway, yeah, Binance had 92% of the trading volume of all Bitcoin by the end of last year. Let's hope that something changes. Let's hope that more, think of how significant that amount of money is and how little the other crypto exchanges have at the exact same time. Very odd, right? Very, very odd to think. That means that there are other crypto exchanges that maybe have 5 to 10 million going through them per day. It's not good. I'm trying to tell you right now. That's the Binance monopoly news. Yeah. Let's move on. Also sure, why not? It just seems, this is kind of the theme already. Crypto banking firm Juno, that is Juno, has advised its customers to self-custody their coins or sell them, as it is planning to migrate client funds to a new custodian, according to a tweet on Wednesday. The decision comes as Juno's current custodian, Wire, that is WYRE, prepares to wind down its operation in the coming weeks. This was said by Juno's CEO. They said, "We are switching custodians because we expect potential issues with Wire, given that they might be scaling back or winding down." A couple of days ago, we had news that Wire, WYRE, who is a crypto custodian payment firm company, they all do 1,000 different things. Apparently, the news that we got from a number of sources was that they're closing down, and then Wire said, "No, we're not closing down. We are simply winding down operations, maybe have to do some layoffs, whatever the case might be." However, a number of companies who were using them announced that they also are no longer going to be using Wire, or they have to find another solution. And crypto bank Juno is also one of them. Very weird. How many times this keeps happening. One, a crypto firm comes to life and announces, "We are doing X for the community." Two, a number of companies begin to use number one. And then by the time number three happens, we end up hearing that number one isn't working, or lost money, or is fraudulent, or has been hacked, or something. And the number twos have to find a new number four. And it just kind of keeps going in this way. So I guess it's just a public service announcement. If you have your money in Juno or on Juno, they're telling you to self-custody your coins and or sell them, because they can't help you anymore until they find a new custodian. And this once again leads us down the dark path of larger companies such as BlackRock and Fidelity being like, "Oh no, your platform fell apart. Oh, that's really sad. Well, guess what? You can come over here and use us because, we have all the money." And then once again, we are no different than the former system that we've been trying to get away from. But once again, that's neither here nor there. That's the Juno news. Yeah. Let's move on. Also in the news as well, the Grayscale Ethereum Trust, or ETHE, ETHE, is now trading at a 60% discount relative to the price of Ethereum per data from YCharts. For those of you who missed it a couple of days ago, no more than a couple of days ago, the company Grayscale, who is in everything but name, running a Bitcoin ETF. The news was that their Bitcoin ETF is basically running at a 50% discount. What does this mean? If you were not smart enough to actually buy physical Bitcoin and you decided to buy a paper form of Bitcoin through Grayscale or whatever, other ETF type of thing, you got a representation of Bitcoin's value through their trust. It's meant to act as a stable coin in that it is relative or tethered to the price of Bitcoin. However, that's not how it works when you don't actually have Bitcoin. So the value of their paper Bitcoin, I'm, simplifying here, their paper Bitcoin through the Grayscale Trust has lost 50% of its value. So if you had gone to Coinbase or Kraken or even Binance and had bought Bitcoin, your Bitcoin would still have Bitcoin's value. However, if you went to Grayscale because you were trying to be a smart aleck and you decided to buy some Grayscale paper that had the word Bitcoin on it, that piece of paper is now only worth $8,000. Got it? Cool. So the same thing is happening now with their Ethereum trust, which is trading at a 60% discount. Though at one point the fund actually traded at a significant premium relative to ETH, it has continuously been at a discount compared to market prices since November 2021. That's really weird saying that. I for some reason thought we were still in 2021. That's very odd. Ethy allows traditional investors to gain exposure to Ethereum without investing in the cryptocurrency themselves, and that's always the problem. All these funds, all these institutions, they all have a clever way for people to invest in crypto without actually investing in it. This was a major topic in 2018 and 2019. This is why people allegedly were asking so much for Bitcoin futures. They didn't want actual Bitcoin, but they wanted paper representation that said that they were holding Bitcoin for whatever stupid, moronic reason that they might actually have. And look at where it got them. I said this before. Imagine you want to buy a home as a rental property and someone's like, whoa, 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 whoa. Here's a piece of paper that has a house drawn on it. How do you like that? And you go, you know what? I don't want to own a home. The piece of paper sounds fine. You try and sell that home 13 months later and it's lost 60% of its value because you didn't have the actual home. That's basically what it's like. So yeah, there's a little chart for Ether. Sure, why not? The fund, which has roughly $3.6 billion in assets under management, has lost roughly 68% of its value this year to date, as ETH and other cryptocurrency assets have declined more broadly. So I guess the next one that we should be hearing about is Cardano, because I think they also have a Cardano trust. I assume that one lost 70% of its value. I would love if news like this actually got people to invest directly into crypto. And I assume a large portion of the institutions who lost between 50 and 60% of the. Now imagine you bought into Grayscale's trust when Bitcoin was at 40,000. Bitcoin itself falls down to 16,000, so you've already lost a couple of bucks. And then you look online and you see that 16,000 in Grayscale money is only 8,000. I can only assume that they'll actually be investing in the real thing after this whenever they do actually get any of their money back, because that, just invest in the real thing. What's the point of you? I don't get it. Anyway, that's the Grayscale Ethereum Trust is trading at a 60% discount. That doesn't sound too nice news. And yeah, let's move on. Also in big news, Nikhil Gopalani, who's the COO of Artifact, that is RTFKT, has reported that his NFTs were hacked. As of December 2021, Artifact, a next-generation crypto brand creating waves in the digital wearable industry and producing content collaborations with Takashi Murakami, was acquired by Nike. On Monday, a fraudster, or a thief, apparently launched a phishing assault on Gopalani, and he lost every single NFT that he had. For those of you who missed it, this was last summer, I think. Someone also stole all of my NFTs, and the vast majority of what they stole was either Shepherd Fairy stuff or stuff from Artifact. So, seemed to be very popular with criminals. At the time of writing, the wallet associated with Gopalani has only one NFT left, a Clone X theme song valued at $59. And he apparently lost all of his Ether as well and only has 11 cents worth of Ethereum remaining as well. OpenSea data shows the attacker used 2 wallets to steal $173,000 worth of NFTs. He stole 19 Clone X NFTs, 18 artifact space pods, 17 loot pods, and 11 crypto kicks. For those of you who don't know why Artifact was one of the, and still is, one of the more popular NFT things, it's because they airdrop all the time. So basically, if you had a Clone X, I believe you got an airdrop of something else. And if you got these something else, you were given like a box. If you had the box, you were given inside like your own little metaverse space home. If you had that one, you got another like add-on to the home. So they keep airdropping stuff, and basically it's tons of free money. I have a couple of friends who were like really into it, and they, for lack of better words, they made absolute bank. But they also self-custody and put their stuff onto ledgers after all this stuff has been going on. So the major news, this is news because a couple of days ago, week and a half ago, there was a very well-known Bitcoin developer who also had all of his Bitcoin stolen because he was basically custodying the coins on his computer and not on a ledger. And what was the other thing? And now this guy who's also like, so basically it's these people, the news kind of floats around that these people should have known better. That's usually what the news is. Well, they got robbed because they should have known better. So this is why it ends up making big and or popular news. It's very sad. No one should be thefted from. So yeah, this was also very popular. This is just another reminder. If you are afraid of self-custodying, I do get it. It's quite daunting mentally to understand that you have to hold your own money and you are accountable for your own things in life. But I would implore you, as I have many others, it is going to be worth your while to buy a ledger or two, simply because if you have 100% of something on a website and that website disappears, you're fudged. If you have one ledger holding 33% of all your assets, another one holding 33%, and if you feel comfortable with a particular cryptocurrency exchange, put the last 33% on there so at least you are covered in some sort of way. If you have all your NFTs, if you have all your assets, if you have everything on one platform, and that platform disappears, you are going to have a very difficult year. That's the Artifact news. And yeah, let's move on. So this is a very special news story. Like I need you, and I didn't even realize, it's a very common theme in this video. I need you to really pay attention to what's happening and how things are shifting and what this is going to mean for you and your money, because so many people in crypto get into crypto because they're trying to make money as quick and as fast as possible. Celsius Network has just won ownership of $4.2 billion worth of crypto deposited by other people. This is according to the Wall Street Journal. For those of you who do not remember, last year, there were, say it with me, roughly between 15 to 20, 25 different collapses of platforms, networks, DeFi, you name it. All these things were falling apart. The really sad part is that so many things that claimed to be DeFi, decentralized finance, that does not have a leader, guess what? They weren't actually DeFi at all. Celsius collapsed over the course of last year. I don't remember the exact sequence of events, but it didn't work out for them. Part of the issue is, here we go, is that allegedly, as Celsius went down, they stopped people from being able to take their money off of the website, which is fairly common. Usually if a website's having a problem, a phishing attack, a scam attack, a 51% attack, a DDoS attack, they will halt their website, halt their network, halt their so-and-so and say, hey guys, we have a problem. We're trying to get back online. Part of the problem is you should not really be able to do that for DeFi. Point number two is a lot of people began to realize, hey, I have a lot of money on Celsius. I would love to get my money back. Celsius then on Twitter, which we also went over in a video, basically announced that all of the money that people had deposited on their website belonged to Celsius. Why would they say this? Because in their terms of user agreements, it allegedly said anything deposited to our platform belongs to us. I keep going over these red flags and no one seems to be getting it. Anytime these platforms pop up, it is a sure thing. The moment these platforms pop up and people begin to tell me in the comment section or on Twitter, hey, look at this new thing, it's the best new thing, it's only a matter of time before it's a scam or before it collapses. I'm telling you, I've been in this market for a very, very long time. The problem is that no one checked out their user agreement. No one checked to see what was going on. So I'll repeat that once again. Celsius Network has just won ownership of $4.2 billion worth of crypto deposited by customers. The move now allows the bankrupt platform to use the funds however it wants. Are you angry yet? You should be. Notably, this money belongs to 600,000 customers. 600,000 people will never get their money back. This program initially allowed customers to make interest on their cryptocurrency deposits, the ruling says. When the cryptocurrency assets, including stablecoins discussed in detail below, were deposited in earn accounts, the cryptocurrency assets became Celsius's property. And the cryptocurrency assets remain in the earn accounts on the petition date, became property of the debtors' bankruptcy estates. Please, for the love of your hard-earned money, stop using these platforms. Take your money off. Self-custody. Learn how to take control over your own finances. People are using these platforms because these platforms tell everyone, I can make you 19% per year. You want to make big money? Throw it onto my platform. And this happens over and over. And this isn't even part of last year's news. Last year's Celsius news was that Celsius collapsed and people couldn't take their money out of it. The people from Celsius now have $4.2 billion. $4.2 billion worth of crypto. That's theirs. So, if you were at all affected by any of the 20 collapses over the course of last year, from the bottom of the goodness of my heart, please learn these people do not care about you or for your family. They're trying to take your money. Think of what it means for a platform to knowingly, allegedly, as far as we saw online, have something in their user agreement that if it touches our website, if it touches our database, if it touches our platform, your money is ours. How many more times do people have to get scammed before we can finally move away from things like this in the cryptocurrency space? It's very, very sad. These people just got $4.2 billion that they do not have to give back. It is theirs. That's I hope you take your money off of crypto exchanges. If someone offers you a 20% yearly return on your money, it's probably a scam. And I hope that if you choose to invest in crypto, that you choose the right coins. The right coin is not the new coin that came up 3 weeks ago. The right coin is not one that your friend told you knows it's definitely about to 300x and then it doesn't. The right coins are the ones that are doing trillions of dollars in transactions per year that banks are actually integrating and actually using. Follow the money. Don't follow the criminals. That's the Celsius news. Let's move on. I sincerely do hope that you've all enjoyed. I hope that you have a great day, morning, afternoon, and or evening, wherever you are, wherever you might be. I hope it's absolutely fantastic. It's very draining to always have to constantly reiterate these things, but I do it in an effort to try to help people. Because I know that the cryptocurrency space is very shiny, and when we see these things walking around, we only want to make huge amounts of money without realizing what the repercussions might actually be for throwing your money into a platform. You hear big earnings, big savings. This gets you more than any other coin, and people do it. There were billions of dollars lost just last year, and we already are not starting off the year on a good note because people keep using platforms like this. Thank you all once again for watching, listening, and or supporting. And I will most certainly be talking to you all soon. See you.